You own about 8,000 units of real estate with $1 billion in debt. Does the $1 billion in debt scare you?
No, I've been more in debt than that. I get scared when it's not covered by somebody paying it. So, I have 10,000 tenants, so they basically pay it off.
Doesn't $1 billion scare you at all? Like that's a lot to be owing to the banks.
Well, it's kind of like the frog in the pot. You buy one, and then you buy two, and then you buy three, and next thing you know, you got 8,000 units, and you've accumulated debt. And one day I added it up, and it was a lot. But it's one at a time. So each one, there are individual projects that scare me, but certainly not the number.
And how much do you have in assets?
Probably 1.5 to 2. Right now, we're probably valued at 1.5 billion, I would say.
How do you have 1.5 to 2? That's a pretty large swing. That's
based
a 500
on
million.
Yeah. So you know how cap rates work?
Yeah.
Okay, so cap rates went up.
And values went down.
That's it.
And when cap rates went up, how much money did you effectively on paper lose?
When cap rates went up, easily quarter million, probably 250 million, 300 million, 400 million, easy. So when cap rates go from 4 to 5, that's a 20%.
And so how does it feel to lose hundreds of millions?
Yeah, it's a great question. I think a lot of people hang their hat on how much equity they have in a home or something that they own. I don't do that. It's important. I want to have equity, but I'm more concerned on cash flow. So it's just like the single family housing market right now. It's not great in a lot of areas. It's great in some areas, but it's not great in other areas. So when the equity goes down, it was fake equity in the first place.
Then why not sell? If it's fake equity in the first place, and you see the values maybe starting to fall, that would be a good time to exit. I'm a cash flow guy. Like, I'm very different than you guys. Yeah. Like, I get where you're coming from. I get it. But I like the cash flow. I like the reoccurring revenue. And, we get millions a month coming in cash flow. And so if I sell, yes, I get the money, but then what do? I stick it in an index fund. I would rather have it in hard assets that somebody else is paying off for me. And plus I get the tax benefits, plus it's levered, which I like. I like low leverage, but I do like leverage. Now, Warren Buffett has a great quote when it comes to leverage. Can we pull that up? I'd love to get your thoughts on this.
To make money they didn't have and didn't need, they risked what they did have and did need. And that's foolish. That is just plain foolish. It doesn't make any difference what your IQ is. If you risk something that is important to you for something that is unimportant to you, it just does not make any sense. I don't care whether the odds are 100 to 1 that you succeed or 1,000 to 1 that you succeed. If you hand me with 1,000 chambers, 1,000,000 chambers in it, and there's a bullet in one chamber, and you said, put it up your temple, how much do you want to be paid to pull it once? I'm not going to pull it.
What do you think?
Well, it's no surprise he's not a real estate guy at all. I mean, if you pull up Zell or some of the other people that I follow, they would say something very different. I think the difference here is you guys are paper, and I'm not. I don't love the paper asset world. I don't like the volatility of it. I don't feel like I can control it. I can control what debt I have. I can control the interest rate. I can control the monthly payment on whatever I borrow. I don't over leverage. And I can largely control my apartments. I can control the occupancy. I can control the rents to a certain extent, even though they're also market driven. I can control a lot of the expenses. So, what we're really talking about here is control. And the paper asset market, I don't understand it to the point to where I can control it. It doesn't have the predictability as real estate.
But still, for just a peace of mind perspective, from just like a philosophical perspective, if you exited all of your real estate, not even exited, you just paid off your debt, consolidated, so you had $500 million in real estate or whatever it may be, $600 million. Your life doesn't change between $600 million debt-free and $1.5 billion in real estate with $900 million in debt.
Correct. Right. That's why it doesn't bother me.
But having more wouldn't necessarily change your perspective either, right?
Having more
cash flow, assets, debt, having more.
So like when am I done and how much is enough? Is that what you mean?
To a certain degree, yeah.
Oh, sure. Well, right now I'm rolling out really a legacy play with my kids. So my kids are involved now. and they're going to, succeed, and it's more of a succession. So really what I'm doing is I'm handing over the reins. But you're right.
Yeah.
I don't personally need more.
And what do you think is the biggest misconception about money that tends to hold people back?
That you need it. Actually, I think that's the issue. I think people believe that they need it to invest. Now, in your world, they do, but in my world, you don't. You just have to find an asset that actually has a tremendous amount of value add to it, something that's broken that you can fix. And then you need to go find the money, either debt or equity.
So how can people practice that in their own life if they don't have the kind of money that you have?
Sure. Well, it's no different than what you did here, Jack. You bought this place where we're in right now. It used to be a church. You rented the front. You got the back for free. That's a value add. It's exactly what I do, except on a bigger scale.
But Jack had a decent chunk of cash ready to deploy.
It took everything. It took everything.
Okay,
I maybe
right.
borrowed a little bit of money from a very good friend to the left of me.
Interest-free
loan.
Okay.
Granted, but he's not paying anything for this.
So now you're just talking about syndication. So this is exactly the point. Like, this is a great deal. This space you guys have is amazing. And that's all I do. I look for things like that. And I'm very selective. Very selective. I mean, in the last 4 years, we actually haven't bought very much.
So how much then did you buy this year?
This year, we'll do about somewhere between 600 and 700 million, depending on what we can close by the end of the year.
So, but how did you say we haven't done that much in the past few years? If this year alone you've bought 600 million?
Well, this year, yeah. But if you go back 3 years prior to that, we only did a few deals.
And where's the opportunity this year? Why this year are you expanding your portfolio by that much?
It's a great question. So what's going on in my world is when interest rates got spiked after inflation in, I think it was June of 22, I believe, went up to 9, and the Fed raised their rates really, really high. They got really, really aggressive. And so if you were going to build something, buy something, refinance something, you couldn't, because rates were up so high. So that changed the landscape. And what it did is it stopped people from actually pulling out construction loans to be able to build aggressively, because construction loans are 8-9%. And of course, they all have to make sense. If you're going to build something, the loan is a big, big piece, not just the land and not where you're going to build, but the loan is a big piece. And so they pulled back. So if you take a look at what's happening in the market right now, things that are being leased up today actually got started 3-4 years ago. That's how the deals work. So you break ground, you don't even really open for a year and a half, and then you have another year to 2 years of leasing, depending on the size of the property. So we have a long runway. And so what's happened is there's over 500,000 units hit the market in 24 and 25, the largest ever in history in 50 years. So what you have is you have a big glut of units that got hit into various markets, and it's all a result of low price debt. Then the debt repriced. So, and the interesting thing about construction is that in construction loan, you don't actually have fixed rate. Doesn't exist. It's a floater, and it's personally guaranteed. So we have all these units that are being built right now all over the U.S. And it's actually creating really an advantage for the renters, because you can get month free, 2 months free all over the place. That is a result of the excess supply.